All right, today we're doing a deep dive, a real anatomy of a stock market explosion. We're going to break down how one single stock just seemed to defy gravity and what the hard data tells us about a surge this massive.
So, get this. In just one day, a stock, OMEROS Corporation, shot up over 150%. This wasn't just a good day. This was a massive financial event. We're going to dig into the technical story here to understand not just what happened, but more importantly, why it happened. Just take a second and let that number sink in. 154% in a single trading day. I mean, a move like that doesn't just get noticed on Wall Street, it practically screams for an explanation. And to put that percentage into real money terms, just look at these numbers. The stock closed one day at about $4 a share. The very next day, it's trading well over $10. That is a mind-blown leap in value, literally overnight. So this brings us to the big question, right? Was this just some random one-off fluke, a flash in the pan? Or is this the opening act for something much, much bigger for this company? Well, the answers are hiding in the trading data. So our first piece of evidence, and believe me, it is a huge one, is hidden in the trading volume. The scale here is, well, it's just staggering. OMEROS usually trades about 1.5 million shares a day. On this day, October 15th, it traded over 125 million shares. That is more than 80 times its daily average. That's a huge clue that this wasn't just a few small-time traders getting excited. This was a full-blown, market-wide event. And this is exactly why volume is so important. A spike this big tells us that the major players, the big money, the institutions, were jumping in with both feet. This gives the whole price move legitimacy. It confirms it wasn't just random noise, it was a real powerful shift in the market.
Okay, so we've established the move was real, and it was backed by some serious volume. Now let's pop the hood and see what the more advanced technical indicators are telling us about the stock's underlying health.
This little dashboard here gives us a great snapshot of the stock's internal engine, and what it shows is fascinating. It's a real conflict. You see, the trend indicators, which tell us the stock's direction, are screaming extremely bullish. But then you look at the momentum indicators, which measure the speed of the move, and they're flashing a big warning sign, overbought. That's basically saying the buying frenzy might be getting ahead of itself. And to top it all off, volatility is through the roof, which just means the price is all over the place and super unpredictable.
And this right here is the critical point. This is the core tension of the whole story. It's kind of like an engine that's revving way into the red line. The power is just undeniable, right? But there's a very real danger that it could overheat. The stock is strong, for sure, but it may have just gone too far, too fast.
And this number, wow. This shows you just how far the rubber band has been stretched. The stock is trading over 116% above its own statistical trend line. What that means is it has completely detached from its recent normal behavior. This creates a huge dilemma for any trader watching this. So is this surge creating a powerful new reality, a new higher normal for the stock? Or is this a classic case of what we call irrational exuberance? A bubble that's just destined for a sharp correction.
So to try and navigate all this uncertainty, analysts start to map out key price levels to watch. You can think of these like the critical roadblocks and safety nets that could really define what happens next for the stock.
And here's the map. The roadblocks, or what we call resistance levels, are basically price ceilings the stock has to punch through to keep climbing. Right now, those are at $11 and $12.10. Then you've got the safety net, or support level. That's the floor that has to hold to prevent a big slide, and that's sitting at $9.19. So we've looked at the price, the volume, the technicals. We've got all the clues. Now, let's piece them all together and see what the final verdict is. When you boil it all down, the analysis really points to three main possibilities. Scenario 1, the bull run just keeps going, it smashes through that resistance and heads higher. Scenario 2, a cool down. The stock just trades sideways for a bit, kind of catches its breath. Or Scenario 3, a pullback, where it fails to hold that safety net at 919 and gives back some of those huge gains. So what's the final conclusion? Well, the verdict is that a really powerful, long-term bullish trend has definitely been set in motion, and it's backed by that huge institutional volume. But, and this is a big but, in the immediate short term, the stock is so overextended, so overbought, that a cool down or even a pullback isn't just possible, it's probably likely.
And this brings us to the single most important takeaway for the next few days. The stock absolutely, positively has to hold that support floor at $9.19. That price level right there is the key. It's the battleground that will tell us whether the bulls are still in control.
And that leaves us with this final thought. It's a classic Wall Street showdown. You've got an unstoppable force of buying pressure that has just slammed into the immovable object of statistical reality. So when a stock is this powerful, but at the same time this dangerously overextended, something has to give. The only question is, what gives first?